Hi, I'm Max Keiser. This is the Keiser Report. Some are saying that economics is the new rock and roll. I tell you what, somebody should ring over to Metallica because they are fearful of going on tour in Europe due to the instability in the currency markets in the Eurozone and around the world. Here's a group called Metallica, and yet they are completely unhedged in that they own absolutely no metal. They own no gold. They own no silver. Their manager is whinging on about, oh, the currency risk, the currency risk. Get some metal, you frickin' moron. Oh, that's right. Economics is the new rock and roll. Get off stage. Stacy Herbert.
Max, I'll tell you who was hedged with a special purpose entity vehicle, and that was Hank Paulson. You know, in episode 218, you said 7 circles of hell from Dante's Inferno. There are actually 9, and we've received so many comments saying that, Max, there are 9. And the 2 you missed, of course, Max, were number 8, which is fraud, and number 9, treachery. The 2 things that define Hank Paulson, and I thought perhaps he wrapped it up in a special purpose entity vehicle and put it off balance sheet, and that's why you were confused.
Well, no, that's right. Hank Paulson took the 2 lowest circles and he wrapped them up, re-securitized them, and now they're trading off balance sheet in Dante's Inferno, in the post-Inferno, somewhere in the Inferno afterlife. That's why I called Paulson Satan times Satan. He actually took 2 circles of hell and distributed it as an off-balance sheet special purpose entity account, and it's collateral for a Goldman Sachs super hell collateralized mortgage obligation bond. It's a $1 trillion business.
You see, Beelzebub made you speak in tongues.
There, I just made $1 billion. I'm Hank Paulson.
Well, there's a continuation to this story. We were talking, of course, about the fact that he gave inside information to a dozen hedge funds, half of whom were former Goldman Sachs employees of his, about the upcoming nationalization of Fannie Mae and Freddie Mac. Well, Rolling Stone's Tim Dickinson asks, Hank Paulson's crony capitalism. In the first paragraph, he says, Max, crony capitalism isn't usually this bald, but then again, this is Hank Paulson we're talking about.
Yeah, crony capitalism, the term doesn't go far enough to describe Paulson in this case, because we're talking about trillions of dollars here and billions that he gifted to his buddies.
Well, I thought it was a perfect mafia name for him, Hank Baldface Paulson. So anytime we refer to him now, we should just call him Baldface Paulson.
Yeah, hopefully someday he'll be swimming with the fishes.
So the article then, chronicles all the insider trading that Paulson obviously and blatantly did. And it ends with the biggest crony capitalism of all, which was TARP, when he said, this is an investment, not an expenditure. And they break that down and they look at it and say it's a bald-faced lie, because for every $100 in bailout funds handed over to healthy banks, the American taxpayer received just $78 worth of assets, according to a report by the Congressional Oversight Panel chaired by Elizabeth Warren. So in total, the Treasury paid $254 billion for assets worth just $176 billion, which was a stealth bailout of Wall Street of $78 billion.
Yeah, and of course, you hear all the time on mainstream American television, under Obama and Paulson, people got back, the taxpayers got back the money from the bailouts. That's a bald-faced lie. That's a Hank Paulson bald-faced crony capitalist lie. But these liberal talk show hosts, like a Bill Maher, for example, on HBO, he says this every other week. Well, the taxpayers got the money back, which is not only not right, but it's not even 10 cents on the dollar. They didn't even get back a penny on the dollar. They're still waiting to get back their first penny on the dollar. And yet, this guy just perpetuates these ridiculous notions in the public domain that somehow his boy Obama is faultless in all this when he sanctioned the theft by Paulson.
A continuation of this theme of the mafia racket that has become the federal government and those connected to the federal government. Here's the spin on the Hank Paulson story, the positive side. Paulson hedge fund chat, business as usual, says William D. Cohen of Bloomberg. He asks, was it nothing more than crony capitalism, as Rolling Stone and Janet Tavakoli said? Or was it just Paulson doing a difficult job, as argues William Poole, a former president of the Federal Reserve Bank of St. Louis, who said, it seems to me you've got to cut the guy some slack. Even if he tipped his hand, how do you prepare the market for the fact that policy has changed without triggering the very crisis that you're trying to avoid? What is he supposed to say without misleading these people?
Right. Well, they didn't use the term liquidity or market making, which is generally the terms that they use to cover for their crimes in this sense. And that, again, is completely a misleading statement. If there's no market for these securities, that should be the tip-off, that the market is saying that we don't want to do transactions with these securities. If you create, fake liquidity to make markets in these securities, you end up with $700 and something trillion in derivatives that we have now in the current global system. Too much debt that could possibly be absorbed by the system, and all these draconian austerity measures that are being forced onto people and causing huge suffering. So that's not enough. I mean, it's just not enough to say that I'm stealing money because there's a liquidity issue. If I go into the liquor store and I hit somebody over the head with a ball-peen hammer and steal their money and say, well, I'm having a liquidity crisis, I needed liquidity, that doesn't justify the crime. Hank Paulson, by stealing a bunch of money, and cronies in the hedge fund industry stealing money and saying, well, we're having a liquidity crisis, that doesn't justify the crime. You're broke because A, your model doesn't work, B, there's no money because you stole most of it. It's just printing up a bunch of fresh new fiat currency doesn't replace the fact that you stole the original batch of fiat that you stole. And C, there's no regulations to stop you. That doesn't, again, mean that you're innocent of the charge of stealing, and therefore you can be exonerated before the inevitable capital punishment comes your way.
And then William Cohen goes on to say, according to Bloomberg Markets, it seems that none of the bigwigs at the meeting with Paulson traded on the information that Paulson conveyed, although tracking specific short sale transactions is impossible from public information. So he says it seems nobody traded on insider information, although it's impossible to track. So we're just making the statement up out of thin air.
It's impossible to track all the transactions that are in the so-called dark pools, that are in the block trading that goes on off the markets on the Instinet or other areas. Which in itself is questionable. Why should there be totally black pools, unregulated dark exchanges where people can trade on inside information? Clearly, if you look at the price action, I mean, having designed systems myself, I can tell you without any question that there was trading on inside information. I mean, I'll say that, and I'll be happy to testify in front of Congress, and I'll give you exactly how it's done. But you'll never have me there because you're too chicken to find out the truth, because it would mean that the golden goose of the U.S. dollar reserve is dead, and all the thieving going on in Congress is finished, and you've got to get real jobs, prostituting yourself down there on 42nd Street and giving $2 Hummers where you should be, instead of in Washington giving billion-dollar Hummers.
But speaking of not leaving a trace of your crime behind, Max, MF Global customer, my entire account is missing. This is High Ridge Futures Fund, an Illinois-based futures fund, and they said that more than $50 million held in account with the broker-dealer unit of MF Global is missing, and they're asking the federal bankruptcy judge to find it for them, but they haven't been able to find it yet. The article notes that $1.2 billion in total is missing still. That would mean customer accounts are missing about 22% of their total of $5.4 billion.
I know where it is. It's in Jamie Dimon's sock on the weekend when he's uptown doing his pimp thing. I'm Jamie Dimon the pimp. I got some billion in my sock. Come on down and sample my wares. I'm a hoe. I'm a pimp. I'm a prostitute. I'm Jamie Dimon, the CEO of JP Morgan and also the New York Federal Reserve Bank. I'm fly. I'm bad. I'm a super fly bad schmucka. I'm a schmucka schnicka snicka.
And the article goes on to say, once run by former New Jersey Governor John Corzine, MF Global filed for bankruptcy on October 31st after a bet on European sovereign debt worried markets, causing a liquidity shortfall. So here's the liquidity shortfall excuse that caused this crime to happen.
Markets failed. So they failed because the people engaging in them are crooks. And there needs to be a re-architecting of the markets. You don't simply say that the funnel of blood pouring into the streets from the mass slaughter happening on the Hill is beginning to recede. So we need to continue the mass slaughter up on the Hill to keep the blood flowing in the streets. That's the logic of a Hank Paulson.
John Corzine has not been arrested for the crime of taking the segregated funds from his client's account and paying off his liquidity shortfall. Now, look at what happens when Joe Pot of Marmite does the same thing. UK banks charging as much as 800,000% on overdrafts.
That's reasonable. What? How much?
You know, you or I, normal people, have a liquidity shortfall in your account, at your checking account at a bank in the UK.
Yeah.
And you're charged at a rate of 800,000%.
At HSBC. HSBC is the equivalent of financial syphilis. You know, you go in there and you immediately get this disease. Ugh. Whoever banks there, enjoy syphilis.
Well, speaking of liquidity shortfall, Max, Portugal is latest country to go MF Global, raid pension funds to delay fiscal death. Portugal has raided 5.6 billion euros of pension fund assets in a controversial scramble to meet its deficit targets.
That's right. No fund is safe from the marauding banksters and their thieving ways. Pension accounts are vulnerable. Bank accounts are vulnerable. Brokerage accounts are vulnerable. HSBC clients are vulnerable. Barclays accounts are vulnerable. Bank of America is vulnerable. Wells Fargo is vulnerable. Don't think Warren Buffett's going to be playing his ukulele and bailing you out when they steal your money. He won't be. He'll be laughing his tuki-tuki off back there in some Hawaiian island counting his billions.
But notice how all of the laws we think we live by are applied just completely different to the normal person compared to a bankster. So John Corzine encounters a liquidity shortfall. He just grabs money. He steals money and pays it off, and nothing happens to him.
Right. So HSBC clients, they have a liquidity shortfall. They overdraft their checking account. They charge them 800,000% interest. MF Global, they have a overdraft on their global account, and they basically make them whole, or they give them a pat on the back, or they give them a multi-billion-dollar reward.
Exactly, and Hank Paulson did the same when he provided $7.7 trillion in liquidity shortfall coverage for the banking system, on which they made, what, $13 or $18 billion in profits. How did they make profit on it if it weren't being paid to take the money to cover their liquidity shortfall?
Right, the term profit is a bit disingenuous, isn't it? I mean, profit implies that they worked for their profit. They weren't just awarded or gifted billions and billions of dollars because they happen to be friends of Hank Paulson. And at the end of the quarter, they said, oh, we have billions and billions of dollars. That wasn't because you worked for it. It wasn't a profit. I mean, getting back to my bank robber or liquor store robber, he doesn't take his, $50 back to his little hole in the wall and say, look, I've got a $50 profit on my business. No, he just, he has $50 that he stole. I mean, this is the money that they stole. All the banks should be required by the FSA and the SEC to change the word profit to stolen money, so we understand what's going on here more clearly. But of course they won't, because they work for the banks. Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away, much more coming away, so stay right there. Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to Boulder, Colorado, and speak with Rick Ackerman of Rick's Picks newsletter, available at rickackerman.com. Rick spent 12 years as a real market maker on the floor of the Pacific Coast Exchange before turning to journalism and newsletter writing. Rick, welcome back to the Keiser Report.
Hey, Max, how you doing?
Very good. Now, Rick, you write, quote, Goldman's death dive. Sounds promising. Tell us more.
Promising, maybe, depending on where you're sitting. My guys, my subscribers love the idea of Goldman going to the zero axis. I've got a target down in the 60s. The stock's trading around $100 now, but it's just bounced off a number that tends to corroborate the zero target. So I don't know. I guess Goldman's got some exposure and
Okay, well, everyone would love to see Goldman Sachs go to zero and go out of business. So is this real, or is there something to hope for? Is this our Christmas gift? Or is it just another false dawn, and we're going to have another 2 years of these horrible financial terrorists destroying America and the global economy?
Well, the trend's unstoppable, Max, and you know the saying about how there's a lot of ruin in a nation, and there's certainly a lot of ruin in the Goldman banking empire. They've got their tentacles pretty much everywhere, and it's not as though they're going to go out of business overnight. But like many big banks, they just have a lot of exposure, a lot of links to problems.
All right, now speaking of Goldman, former bankers from the bank have been placed into power into several European countries now as the vampire squid kind of extends its reach. You have a completely different take on the Eurozone and the euro than most commentators and analysts, so tell us about it.
I've been following the euro pretty closely, and it was curious that it wasn't collapsing even on the bad days. You know, we've got sort of ups and downs in news, and we're on the upswing here because Merkel and Sarkozy are out talking about a four-pronged plan that's going to save Europe. I'm not even sure that's believed at the official level, but I have an idea that if some of the European countries, the pigs, go down, and it looks like market rates are going to push that date forward. You've had Italy's sovereign borrowing rates up at that very critical threshold of 7%. But as as an ongoing concern, Italy's in trouble if it's got to borrow above 4%. So we're kind of watching the euro steady somewhere in the mid 130s. It's trading around 134 and change now. And I think it's because even if a default is allowed for Greece, Italy, and Spain and the others, that certain countries, including Germany, will be keepers of the flame. They're going to keep the euro alive. I don't think the Germans would revert to the D-mark, but essentially the European experiment can be kept alive, and it would come at an enormous cost to Germany to keep the experiment going, simply because they would emerge from a bankrupt Europe as one of the few hard currency economies, and that means they'd be selling Mercedes-Benzes in hard currency. Plus, allowing their customers essentially to go bankrupt would be that would be quite a rough patch for Germany because it's got such a good, strong export economy. But I think when push comes to shove, the Germans are going to do the right thing. It's not so much fear of another Weimar hyperinflation, but rather the idea the German bankers understand that putting another 2 to 3 trillion euro layer of debt on top of the current problems won't solve them.
All right, so you're saying that you could have a split in the euro. Germany would be part of the northern bloc, the strong bloc, the hard currency bloc, and that they immediately would have to take a haircut on their exports because then that currency would trade like the Swiss franc before it was marked down by the Swiss bank, central bank. Remember, it was galloping along and trading quite high. So they would take a haircut on their exports. But they are, you're betting, or your thoughts are that this is preferable to simply engorging the Eurozone with multi-trillion-dollar fiat currency-enabled debt layers, because that would be a guarantee repeat of the hyperinflation days?
Well, exactly. I don't think they could promote another hyperinflation similar to the 20s. The mechanisms aren't in place that did that, but it could come about in another way. You know already that I've been kind of a hardcore deflationist over the years, but at this point I accept the argument that at some point we would have a hyperinflationary spike.
Okay, so if the euro is not as bad as people are making it out, then I would say the flip side of that, the dollar is probably not as strong as people think.
The dollar has been, and I use this word in quotes, a safe haven, and it's really a matter of the whole world's money, hot money, piling in and out of what they call the risk trade. And when the dollar looks strong relative to other countries, you know we've got problems.
All right, now let's talk about the relationship between the dollar and the euro. Markets react with wild euphoria to the announcement that the Fed swap lines to Europe are open. Explain what the swap lines are, how the euphoria will be more or less short-lived, I think, is one of your thoughts, or not. Can you talk about the swap lines and talk about U.S. money markets as well and how that plays into the scenario, if you have a comment on that?
Well, the reason the swap lines work, I think, is because no one can explain them. You know, you have a question, the rate on swaps has gone down. It's easier for countries that get in trouble to borrow in dollars. But ultimately, the guarantor and the source of those dollars is the U.S. So you might ask the question, is the U.S. essentially getting in knee-deep in Italian and Spanish debt? Are we ultimately becoming the guarantors? And I think we are. But it's really hard to kind of follow the money path there. You can assume, though, that it's financially speaking, the world is one interlocking directorate, and the U.S. has come in to help suppress the borrowing rates of Italy and Spain. Right.
Well, the money markets in the U.S. are invested primarily in euro sovereign debt, and it was apparent that the credit was freezing up And so the Fed extended this line of credit to Europe in order for the money markets to not to repeat what happened in 2008 when there was a huge risk, or a repeat of 2008 when the actual money markets were threatened to freeze up. But what do you make of the MF Global story, Rick Ackerman? What rules, regulations, and laws have been broken? Why is John Corzine yet to be arrested? What's your take on that?
Why is he yet to be arrested? I don't think I'd bet on that. But, you know, the thing about MF Global, when I saw the story initially, I thought, well, here's another problem that's going to affect the hedge funds and everybody else. It's a little too deep in leveraged derivatives. And it turned out that a whole bunch of my friends were snared in MF Global too. I was talking to an American friend of mine who lives in France and trades, and his account, just like Gerald Celente for one, his account has been frozen. And he says they know where the money is, but it's odd that it's just being sort of kept in some sort of escrow there. But it shows you ultimately how fragile the network is that allows me and everybody else to trade right on up to the level of fairly large hedge funds. But MF is going to, it looks like it's going to take a lot of retail guys with it. And the problem, you know, it looks like they'll get their money back, but not everybody can wait 6 months or a year or however long it takes.
Well, confidence in the system is shaken, and the system runs on confidence. People who have brokerage accounts, securities accounts, bank accounts are wondering if their money is safe. The answer, obviously, is no. So isn't confidence, as it swirls down the toilet bowl, isn't this going to add to the complications of the overall systematic risk that's already showing its head?
Well, I think the confidence has already evaporated, and it's odd. I'd have to say that people who still have their money in firms that have the same risks as MF Global are not so much confident as mistaken about the idea that they'll be able to get out first. There'll be some sort of early warning shot, and they'll be able to withdraw their money. So, you know, when everybody, and I use that word in quotes too, when everybody thinks that way, and everybody tries for the exit door at the same time, there is no exit.
All right, now you mentioned about getting out first. We know that Hank Paulson tipped hedge funds about what he was going to do over there at the Treasury when he was running it. Inside information, market manipulation. For people who don't have that kind of inside information, they look at the charts. You know, this is why being able to read the charts is so important. And of course, your newsletter is primarily a chart reading newsletter. And from the charts, from the price action of various stocks, bonds, and commodities, we can glean some trends and make some forecasts. And not only does your newsletter provide some really insightful commentary on directions for people who don't have a hotline to Barack Obama's office where they get inside information directly from the inside trader in chief. But I've also been working as a journalist off and on over the years, so it's actually easy to read your stuff. But so let's talk about commodities. How do you go forward on the commodities? Can you give recommendations you might feel safe holding? How do you go forward in all this environment, Rick Ackerman?
Well, I tend to be an idiot when I rely purely on my instincts, Max, and I've looked at charts. I've put a lot of weight on charts because I tend to get the turning points wrong. Some things are too complex to understand, really. You look at the price of bonds go up or down. I had a target of 140 and 14/30 seconds on the 30-year December T-bond, and it went just a little bit below that. I would say the support held. But to me, it was a very important number because if the bonds are dropping below this important support, it suggests that the world may be on an inflationary course or maybe even hyperinflationary course. So that was a big number for me, and so far it's held. You look at the dollar index, you know, it approached a crucial threshold there at 80, and you might think that that's really what triggered the central banks to act in concert to I guess you could say liquefy the world. So the numbers are really important. One thing that looks odd to me right now is that we've got the Dow up almost 150 points right now, and the February COMEX gold contract is off $8, and that's a kind of divergence we haven't seen in a little bit. I think it suggests that the stock market rally has run its course. It's about 1,000 points right now. But, as far as I'm concerned, it's a lot of noise.
So final thoughts, Rick Ackerman, for 2012. What's going to be the big surprise trade of 2012?
I think it's going to be a very tough year for stocks, and you might see commodities fall across the board. That would include gold, but I think that gold, relative to other assets, is going to be a good performer. So I'd say keep your bullion. As we know from the lessons of MF Global, you want to keep it in the form of physical metal. Don't trust paper. But I do think it's going to be a very tough year for stocks.
All right, Rick Ackerman, that's all the time we have. Thanks for being on the Keiser Report.
Thank you very much. It was always a pleasure to talk with you, Max.
All right, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Rick Ackerman of rickackerman.com. You can follow us on Twitter or Facebook. You can send me an email at keiserreport@rttv.ru. Until next time, Max Keiser saying bye, y'all.